how do we generate exits in Brazil? And that's probably the biggest hurdle of investing in Latin America is how do we get to liquidity? So here comes another question that both LPs and founders have asked us. How do we generate exits in Brazil? And that's probably the biggest hurdle of investing in Latin America is how do we get to liquidity, right? Liquidity is scarce globally, and that's a fact of this vintage and the changing venture market, but it's particularly hard in Brazil, especially for venture-like returns, right? The catch here is that incumbents are not big enough to write $1 billion check and acquire companies for $1 billion. If you look at it, the banks are all worth $10 billion plus and could do $1 billion acquisition. So that works. Some healthcare operators, some insurance companies. But other than that, the companies tend to be smaller than companies that could actually do $1 billion acquisition. And I'll give you an example. The largest company in tech company in Latam today is a company called TOTUS, which trades at 6x revenue, $4.4 billion market cap. They cannot reasonably or easily do a $1 billion acquisition, right? They will do things sub $300 million, which for very small funds do work and create fund returners for them. But for the vast majority of the funds that are, for the vast majority of the relevant funds, which are close to $100 million, a $300 million exit doesn't really create the returns necessary to have good returns. That's why at 14B, we decided that there are very few things we're going to do locally, and that's where the incumbents are worth $10 billion plus. And then the vast majority of what we've been backing and investing in are companies that have greater ambitions than Latam and want to expand into international markets. Because if we develop a product that can be tagged onto a Salesforce, onto Adobe, onto a Visa, and sold to their clients elsewhere, then the landscape for exits is much richer, much more available exits, much better valuations. So that's what we've been banking on. And whereas this was an impossible strategy 10 years ago because of talents and capital supplies, today it is feasible. We have examples that have done it in Latin America. Companies like Auth0 that sold to Okta, Technisys that sold to SoFi, Pismo that sold to Visa. And we're betting that we're going to see more and more of that. There is a catch to that, right? Which is people that are building companies to actually sell the Brazilian market to international investors. And to us, that sounds like a bad exit strategy. So we don't like to sell access to the Brazilian market. What we like to sell is products that people can put on their international client base. So that's a little bit of our strategy. That's how we're thinking about exits in Latam and how we try to circumvent the one big drawback of Latam venture, which is availability of exits. Then people also ask about IPOs. Historically, the very best companies manage to list in the US, better valuations, but to do that, it's very hard to do when it's what we call jabuticaba, which is something very specific to Brazil. That's a very hard sell because you have to educate the US public market investors on what you're doing, and not an easy sell. It's much easier if it's a product or a company they already understand because they have a peer in the US. And then the local market has been historically suffering of adverse selection. It's the companies that couldn't list in the US, listing in the local markets, and particularly the last vintage of tech companies that listed really suffered in the Brazilian public market because of lack of coverage and adverse selection. So we don't bank on them. We would love our very best companies to actually list in the US, but when we are underwriting our case, we assume that these companies are going to get bought out in an M&A transaction before we get to an IPO. Hope that helps. If you have further questions, let us know, and happy to continue this conversation.